Good morning, everybody. This is Chris Robinson, Robinson Ag Marketing. Today's pre-opening grain and livestock comments for Friday, March 6th. Well, you couldn't have asked for a better way to end the week, first week in March. Just green across the board in the grains. We are looking at, uh, I'm looking at March corn right now, right? 446 and three quarters. We are 2 pennies away from the January 12th high. So we've recovered that entire disgusting USDA report. It took us 2 months, but here we are. Uh, the driver, it's got to be crude, right? Crude's at 85. If you're not getting my letter, maybe you want to take a look at it. It's just we were playing go get the old high in crude oil right now. So once we went through 80, that opened up the door to 85. We traded as high as 86.70. And that is the driver, guys. It's pure and simple. And I don't think anybody, if you look at the fundamentals of the grains, this probably shouldn't be happening. So if and when the situation gets straightened out with oil, we could see a different pricing level in corn. However, I'm not going to be Debbie Downer. It's a great opportunity. You've got D's corn at 482 this morning, new crop corn at 482. We were very concerned earlier in January that we'd have sub $4 corn. So to be up here at 480 for whatever the reason, boy, it's a gift. I'll tell you what else. This is the reason that we used very cheap puts to defend our risk. Because back in January, it looked pretty dismal, right? But I did not want to be selling grain down there if I was long grain. What we did instead was buy cheap puts, 3, 4 cent puts. I wish every time we bought 3 cent puts that we rallied 40 cents because that's what happened. The low in the low in new crop corn in January, 445. Here we are this morning at 482. So that's 40 cent rally. And I guess that's the biggest thing I wanted to point out this morning. This is why most marketers or anybody that has a net position really should use options to defend that position. Because, yeah, okay, you might have lost 3 cents or 4 cents on that put option, but you gained 40. Even if you spent 6 or 7, you still are well ahead of the game and you never made a margin call. The same thing for the soybeans. Earlier in the year, we sold $11 beans, went to 11.30, then we broke to 10.55. We were hedged for that. And, we replaced all those hedges. We had $11 puts. Maybe we spent 6 cents, 7 cents for those puts. And now here it is. Soybeans are 40, trading at 11.47. So this is just another reason for why, if you are a farmer or producer, a long option strategy as opposed to selling futures to hedge can be your best bet. And yeah, I get it. You're going to have a loss in your hedge account, but you've gained everything in the cash market. So there's just food for thought. The flip side is too, on any sales that we made, we always look to reown with cheap calls. And so you've got two piles of risk. You've got your unpriced grain, which for most of you is most of your risk. And then for stuff that you sell, you can always reown. And my simple rule is, I certainly didn't write it, you know, if you sell 10,000 bushels, reown five. Be half wrong, half right. Some guys will sell 10,000 bushels and then sell and then buy 20 and they double up because they're doing the Texas hedge. But in any event, good marketing is about staying balanced and also being positioned to reward these types of rallies, which, first of all, fundamentally don't make a whole lot of sense. And second of all, may go away very quickly. We've got two USDA reports. You got the one on the 10th, and then we have the big planning intentions on the 31st. So right now, the Bulls are pounding their chest like Johnny Weissmuller and Tarzan, right? And hooting and hollering, and God bless, we sure do need it. But don't let this rally go to waste. Um, and then real quick, here's the math. Overnight, May corn up 4.5 cents at 458 and three quarters. Um, May beans up 9 3/4 cent at 11.92 and a half. Now May is going to be looking at, can they get the $12 print? We want to 92 and a half. New crop beans traded as high as 11.47 and a quarter. We're up at 22-month highs in new crop soybeans, and we're also into a gap, a real old gap on the chart. So same thing. If we can get 1150, that opens up the door to people calling up saying, "Hey, what are $12 calls?" So use this rally, please. Reward it. If you look at where soybeans are compared to where they were on the lows 16 months ago, we're up $1.65. We're up about 20% in new crops. So you've gotten this gift. And let's face it, back in January, there were a lot of angry, upset, worried folks. And this is a rally that we want to make sure that we use to our advantage. July Chicago wheat. If you've been following my letter, you know I've been watching this silly little trend line. That's what I call it in July wheat. We're right on it again, 610, 611. Um, we bounced. We had a sharp sell off there the first time we tested it. Now we're back up. Are we going to pop above it? Boy, I sure do hope so for the American farmers' sake. So again, if you sold any wheat and you're concerned about it's going to keep going higher here for those bushels that you sold, absolutely get yourself a cheap call and stay in the game on paper. For everything else that you haven't marketed yet, this is another opportunity to make some cash sales if you need to. If you don't need to, then you get the substitute sale with the put and you sit back and see what happens here. Like I said, we have two big reports. We got one Tuesday, the 10th, and then the planning intentions on the 31st. You've got crude oil looking like it wants to get a $90 print here, traded to 86.70 overnight. So that is the driver. And the last thing is you've got speculators now who are like a herd of cattle. They all want to do the same thing, and they're getting long grains. Where for really for the past year, they were all short wheat. They were pretty much short corn. Now they first they got long soybeans, then they covered all their shorts in wheat, and they've been building a small long position in corn. They didn't have anything on massive, really, either one way or the other. Now I'd say they're probably long 50, 60,000 corn, which is not a lot. So the speculators who everybody loves to hate when they're betting short against them, they are betting with you now. So take advantage of their greed. Remember, the reason we have these, the Board of Trade or the CME, it's so that you can lay your risk off on other people, right? This market gives you a chance to lay your risk off. We've just had a tremendous rally here in the grains, especially in the beans, and you don't have to sit here and just hope that it stays. You can do some hedging, you can do some sales, and you can stay balanced because there's a lot of 2026 ahead of us. There's a lot of risk ahead of us, and anybody that tells you that they know where we're going to be because of XYZ, I would take that all with a grain of salt. I have no idea where we're going. I look to the charts for the old highs, and that's kind of what we're doing right now. We're going after these old highs. We're picking them off. And if you've been doing this as long as I have, you know that they can turn on a dime. And we want to be in position so that if the market turns or if the USDA turns the market, that we have captured as much of this rally as we possibly can. So it's a good day. There's a lot of opportunity. Get set for that USDA report on the 10th. Um, as far as the livestock goes, we rolled over a little bit yesterday. I gotta wonder today if we don't just trade with the stock market and with crude oil inching up towards this 87, $90 level. It's putting pressure on the stock market. The stock market's down 232 right now as I talk. The S&Ps are down 35. So that would be my one risk if I'm long a bunch of cattle and don't have any hedges on, is if we start getting some stupid moves in the stock indexes that might put pressure on us. So, all right, guys, this is Chris Robinson, Robinson Ag Marketing, 312-638-8868. Give me a call if you don't have an account open with me. Let's get it going. There's a lot more opportunity right now than there was 3 months ago. Take care.